now.
Hello, folks. Thanks for joining us today. I'm going to be doing my segment on the market psychology, or the market psychology, if you will. The reason why I want to do this is to really break it down, because I think the angst when we're trading, generally speaking, comes from the unknown, right? We're unsure of ourselves, or we're unsure of what's going on. So I think what I can do is bring this back around full circle to create a situation where we aren't feeling the angst as much, because we know what's going on in the markets, because we are a part actually of that market psychology. You can think about it in a simple way of your own trading, right? If you've bought a stock or an ETF, a future, it doesn't matter. If you've ever traded, especially probably that first time you ever traded, you remember that price. Exactly. Probably to the penny, right? Well, that brings about the entire market psychology, building from that little one brick, that one brick, right? Your exchange, your trade with somebody else, they remember that price as well. It's fixed to our head, all right? So when we start trading a lot, and all of a sudden, let's say, for instance, I'm trading something and I sold it at 290, all right? And now I'm looking at that trade and I see it go up to 300. And I think, all right, I'm trading, I'm right on. And it comes back to 290. What do? You start questioning yourself, right? And there's a reason why. It's because you don't really know why you may even traded that price. But the fact of the matter is, when it comes back down to that level, you recognize it, and you probably don't do anything at that price, right? Because I've already traded there. I'm looking for a winner. All right. So when it comes back to that price, we don't usually trade again at that price. And it might even be a year from now when it comes back to that price, especially if it was a loser. You're going to remember that price and think, I'm not trading it. All right. And that whole psychology creates the market psychology, because there's thousands and thousands of us trading at any given day, right? You guys seen this? It's basically what happens in the market. You see a price, you see value, and want to trade it because maybe you haven't had that opportunity. Here, he's bidding really high, and everybody knows that it hasn't been at that price, so they want to sell. All right. So it brings the market back down into equilibrium. And while we on the floor used to talk about this all the time, folks, is that you could literally feel the momentum change in the overall market. You could feel the tension start to build and the market start to change direction. And literally your hairs on your arms would start to stand up, or on the back of your neck, and you wouldn't really know. You weren't reading information. You weren't finding, you could just feel that flow come into the pits, similar to what we were talking about with trading places here. And now, although we are all kind of moving away from the floor and not jam-packed in there, in those pits, folks, you and I are all still trading. We are just dispersed in other places. The interweb is what is connecting us. So we are still making those trades happen. We make that trade with somebody else. I remember it, they remember it. That creates part of this market psychology. So when you can start to recognize these prices of where folks have found value, then you too will know where the best entry level is, or when you've kind of taken a bit of a risk and stepped out a little bit because nobody else is really trading at that level. All right. That starts creating value at different levels. So what I'm trying to explain here is really what we want to do is take all of this information that we are as traders. We know that gut feeling. The previous speaker was talking a lot about your psychology and how you are interacting with the markets, right? And it's very similar to this, in that our psychology really is creating the psychology of the overall markets, because we go through some of the same psychological battles, right? If we're losing on a trade, then that really kind of hurts us, right? same thing's going on with everybody else, especially in a time like what we're currently going through, right? Where the market is pulling back, and generally most traders are long oriented, like makes money on the upside of the markets, right? Well, there are always bearish markets and you can take advantage of those as well. And I talk about that a lot in my videos, but what we need to do here is understand where everybody else finds value before maybe we go out there and start finding value, especially as newer traders. Let the institutional guys give us that marker that we can then trade off of, because we hear all the time that these guys are coming in and buying at certain levels. You know, this is a buy, this is a sell, it's a neutral, whatever. That gives you your first clue as to what the pressure is to the markets. All right. So what we need to do is take all of this kind of together, bring our beautiful mind and all of the market into it, if you will, so that we can understand what everybody else is going through and how that affects our trading, because they're going through the same thing. And if you can understand, hey, this is a level where folks have got to be feeling pain. Well, you know, we used to say when there's blood in the water, that's the time to go fishing. Well, it's very true. When folks are panicking, that's usually the time where we need to start taking advantage of a reversal, right? Because once that capitulation happens and those folks really start dumping their trades, that's when we see the markets rebound, all right? When the selling pressure or the panic has subsided. So we need to be able to understand when those pressure points are hitting those folks in trading, because that will then allow us to keep our powder dry, if you will. All right, so let's get in with some stocks. All right, I'm going to talk about this so that we can relate it to what we are feeling, because I think it's super important. We're all going through the same thing. Some people might smash screens and throw things, and other people might be very quiet, but we are still going through the same issues, whether we're second guessing ourselves on this trade or we're wondering if we should be getting out. All right, we can figure what the market is anticipating by looking at some of the charts and specifically some indicators that will give us a little bit of a clue. Like with this market right here, just XRT, I wanted to take something very broad where it's an ETF, a basket of goods. So we don't really have those arguments on really value or, you know, whether that company is a good company or not right now. So I like to start out with very simple concepts and then try to bring that into real life examples for you folks. So if I am bringing up too many questions in your mind, please throw it over there in the chat window. I'm trying to keep my eye over there. I will answer questions as we go along. I want this to be very interactive. If you guys haven't seen how to trade around the market psychology or the market profile, if you will, which is really just the psychology of the market. On the floor, we used to call this Stottlemyre because he was the gentleman that came up with it in, like, I think 1985 or something like that, came up with this idea that we needed to figure out what the overall market finds value. Because when we are trying to discern what value is, it's a very difficult row to hoe, if you will, because if we think about what we just went through, right? If we go back 6 months, just coming out of the pandemic, everything looked great. The market was blasting off. Everybody was happy. And we were starting to price stocks on forward valuations, which is what we do. We base what the economy looks like down the road and then put a multiple on these stocks. All right. So as long as the markets are trending higher, the economy is trending better, well, then those forward multiples hold weight. But what happens when we see a bit of a pullback? We're seeing signs of possibly a recession. The market starts pulling back. What is value? I mean, even the folks that are telling you what is a buy and a sell don't really know what the value is. They're just trying to make it sound like, hey, if we put this forward multiple on it, put these statistics in it, and put some math in a nice little package, we'll sell it to our clients and they'll buy it. Well, the same thing goes when they're trying to sell it as well. They're trying to get out of it, get the markets to dump. And they don't always talk their position, folks. Sometimes they talk opposite of their positions. As a matter of fact, I've seen it on the floor. And it is psychology, right? It's games that folks play. And a guy from FEMAT, I'm not going to mention his name, but he was probably one of the biggest traders on the floor. And one time I was holding paper for him to buy Fed fund futures, all right? Buying Fed fund futures. It's just like the bonds, folks. If we talk about, sorry, I'm getting a little sidetracked, but we got to talk about this, right? So if you guys know the levers and pulleys of bonds, right? If we talk about price and percent, right, which is bonds. If price is going higher, then interest rates are going lower, all right? So if you think about this gentleman was holding paper to buy Fed funds. He was talking about interest rates going higher. Interest rates going higher, and he's buying, right? That doesn't make sense, other than the fact that he wanted everybody to sell into his hand, right? So those games do happen in real life, folks, and I've seen it time and time again. So don't get caught up just always listening to what's happening on TV and jumping on board with that. That's what we see a lot happen in the markets. You'll see somebody talk about something on TV and immediately the market starts going that way. Well, listen, I think that those folks, at least on CNBC for the most part, when they're talking about their own positions, are probably telling you the truth about their own positions. But if some of the institutional guys are talking about their positions, I would not trust that as far as I could throw it. All right. So don't listen to the noise so much. Listen to your limbic brain. And that is your gut feeling. Like the last, that's where I was going with this tirade, I guess. The last speaker was talking about trusting your instincts. And you put on a trade and all of a sudden you think, you know what, I don't know if I really like this trade. I always say, pull the ripcord. You ever get that feeling, you put on a trade, you've done your due diligence up to that point. You put on the trade and you immediately second guess yourself. I would get out of it, pull that ripcord, get out of it until your mind's right, right? Because your limbic brain is your gut feeling. Like you hear people talk about your gut feeling. That's your limbic. And your limbic is basically the statistician or whatever. It takes all the information that comes into your brain and compiles it. And you know, you might not even remember 90% of the stuff that goes into that part of the brain. And it doesn't have like a voice. It can't really tell you yes, go, no, don't. You know, you get that voice sometimes in your head. But this one's kind of that gut feeling. I don't feel right about this for some reason. I probably shouldn't do it. You get that feeling, don't do it. As a matter of fact, yesterday I got that feeling in a different situation. It had to do with my computer here. And I was thinking, the last thing I want to do is really try and change the configuration of my computer right now because I don't want it to mess everything up. Now, I wanted to get something off of another computer, so I unplugged my monitor, and literally that put me 3 hours behind trying to reset up everything because my computer all of a sudden didn't want to recognize my Wacom pin tab. So anyway, you ever get that limbic brain kicking back to you saying, hey, dude, this is probably not a good idea? I would pull the ripcord out, stop it, get yourself straight, and then maybe if you all of a sudden go back to it, all right, yeah, all right, I see where I was going wrong here. You know, that will probably come about because that limbic brain told you, hey, you need to go double check yourself. Go do it. Follow that. If nothing else, that I give you guys, you can take that away. Go with your limbic, your gut. You guys have done the due diligence. Make sure you follow that. All right. So by looking at this chart, though, what I want to get at is you really can't see where the market wants to go other than maybe down, right? This doesn't give us a whole lot of information. Some people, some of you chartists like that are really into candlesticks might say, hey, we got a bottoming pattern there. Things like that, support level. We don't really see anything. It's very dry. But what we used to talk about with this is if the market is telling us something where you and I are constantly trading back and forth, well, then that means that is value, right? So if we are trading at a price constantly back and forth, we are creating value. And the more and more people that frenzy on that volume creates value. Because if you and I agree on a price, then we've determined value. If the market isn't trading at that price, there is indecision. There's folks saying there's no value there, right? I don't want to buy it there because I don't think that's value, all right? So we'll see the market free fall. So Stoudemire started out with, I don't know why this chart didn't, is my chart not showing? There we go. I don't know what those, but anyway, Stoudemire determined that if we are constantly trading at a certain price, the market has determined value. And that is due to the fact that it has seen that price trade back and forth. Now, remember, back in 1985, we didn't have volume numbers like we have today. Like the computer can tell you tick for tick how much volume is traded there in seconds. Back in the day, folks used to come around and ask you, how much volume did you guys trade today? And you would have to give them a guesstimate. So there was no real tracking until the next day you could find all that information out. So while Stoudemire didn't know what the volumes were at those prices, he figured that if we were trading back and forth at these levels during a time frame, that was determining value. That was creating value. So those were prices that if we got too far away from, and value is up here, if you get too far away from it, what does the market want to do? Find value, right? So the psychology of the market is when it's not value here, it wants to constantly find value, and it will want to go back to these volume or these, well, back in the day, it was the time nodes, because those were the prices everybody saw constantly. They were very comfortable with those prices. They knew they weren't going anywhere, right? You start breaking out of those levels, where is the angst coming from? Where do you and I start feeling the pressure? Well, what he noticed was as these time volumes started building up, we would see a bell curve happen. And as a matter of fact, the bell curve is synonymous with several things, probabilities of what's going to happen. I mean, you might have even gotten graded on a bell curve back in the day when you were growing up. So the market here is determining that same idea with a bell curve just sideways. So it'll kind of draw out and then come down. So there's your bell curve. Right in the middle is the value. You start getting overextended or to either side, right? You start getting outside that bell curve. You're starting to stretch the probabilities of what should be happening, all right? So once you start getting out on the tails, basically what this is saying is 70% of the trade has happened within that area, okay? So, you know, that means that 15% is up here and 15% is way down here, which are pretty low probabilities. Now, it doesn't mean that you can't fall further like we did here. Why do you think it might have fallen down to those levels? Well, one is the economy is not looking so great, but we could look at this in a 1 year chart. Again, we're seeing the bell curve happen, but we're also now, from breaking this down to a 1 year chart, it does take out some of the data, but you can also see there's another little bell right here, all right? So what we're seeing is value is being accepted at lower levels, right? We're still at extremes. So when you start getting to extremes, that's where you start seeing the capitulation happen and the institutional or the smart money coming in to gobble it up, all right? When we start getting that pressure, this is where the retail investor starts getting out. This is where you're going to start seeing that capitulation happen and start seeing that volume build up, because there's going to be buyers at these levels. All right. That's what people are going to start doing once they start seeing those extremes. And then to zoom in, each of these little time brackets on the floor, we would use 15-minute time brackets. These are 30-minute bars. So every number, you'll see different colored numbers as well, right? Every number is related to a specific time frame. So for instance, the bell rings. That first time bracket is 1. Second time bracket, 30 minutes later, is time bracket 2. So what happens is, as price trades through that in time bracket 1, we get a 1 print. Every place that it prints. All right, if it comes back down through the 1 during the 1 period, it doesn't print 2 1s. It's just 1 1. It did it in that 1 time frame. If it starts going to the second time bracket, now 2 start building. 3 start building, 4 start building. So you can see how that bell curve really starts to build out because people are buying at those levels. All right. That is where we start seeing what we call the point of control. All right. Because once that point of control is built out and value has been created, then we can create our bell curve from it. Sometimes it's skewed. Sometimes it's a really nice bell curve. And sometimes we get broken, 2 different ones. The idea when you have 2 different ones is that it wants to create one big bell curve. All right. A harmony, if you will. All right. So another thing we could do is add in a layer of volume, because the volume is another psychological level. I actually like the volume a little bit better than the time bracket, because the time bracket tells me people are just wavering. They're not really participating in the market. When we start to see those volumes pick up and create a volume node at this level, that means people are putting their money where their mouth is. So they really want to start getting involved. The time one tells me people just don't want to get involved. So we shouldn't be getting involved in times where people aren't trading, because it's just going to waver back and forth. What we need to do is wait till everybody else is panicking in a situation when we're trading around the market psychology. That's when we start getting outside of the value area, those the 70% mark. This one's a little bit wanky because we got the 2 different volume nodes. So what happens here is we've got this one for the volume, and we've got another one here for the volume. So it's basically saying 70% here, 70% of the volume traded at that level, and that the right here, if we look at from here to here, this is where 70% of the time was. All right. So we have 2 different volume nodes there. This right here would be a point that if I were looking to trade XRT to the bullish side, this would be a place where I would look for the market to go. Yes, immediately it should go to the point of control, because the point of control is a magnet. It's the psychology, right? It's a self-fulfilling prophecy, folks. When people have traded all that price, it wants to go back there. So like a magnet's drawing it back up. We start seeing the people dump, market starts reverting, it starts going back to our price. We might get back in because, oh my God, it's going back to my price again. So we also will drive that to those levels. At the end of the day, psychology of the market here, this is a yawn, right? We don't want to get involved in here. But when we look at the volume down here, the volume node, market wants to go back. After you tested this value area and rebounded, the market wants to go back. Now, for you folks that are newer to trading, whether it's stocks, options, any of that, one of the things that I always talk about is IBM, because it was one of the first things that I started trading in college. And the reason why is because it's a little bit easier to see a trend when it's sideways, right? It's hard to discern a vertical trend because you got to have that trend channel go at an angle, and it's kind of hard to see where the next top should be, right? Or the next higher high. But with this, because it's laying on it sideways, we can pretty easily draw in some lines. And what do you notice about some of these lines here that are pulling in? It's the value area that we were talking about with the market here. You can see IBM loses momentum up here. I'm going to change that to a white or something. I don't like the green. Sorry. Okay. Anyway, I guess I will stick with green. Where's my pen? For some reason, I've lost my marker. There we go. All right. Phone a friend. Computer wanted to jack me up. All right. So this right here, 70% of the trade is happening. Now we can see the volume and the time lining up quite nicely. That's probably because we've had time and volume trading at those places quite often. There's a pretty solid point of control, meaning that's where folks find value in IBM. So when it gets extreme levels, we see it get outside this area. It wants to go back to the point of control. We see it get outside the area and it wants to come back down in. So what we look for with the market psychology is that we get to those extremes. That's where we start feeling that pain. If we don't see it with the market profile here, which is volume and time, then we can't really tell what everybody else is thinking. This gives us a great idea. We know that people have not found value down here. There's no value down here really, right? Nobody wants to participate down there. It pops down there, we snap right back up. Same with up here. Everybody gets up here and it's like that Trading Places video. Everybody is screaming to sell because they haven't seen 145 in IBM, right? So that's what brings the markets back down. And if you can understand when these extremes start happening, then you can take advantage of it. There's also, we can look at E-mini S&Ps. We can draw up these trend channels, try and find some head and shoulders in there, reading the tea leaves, but really, where does this market want to go? It's very difficult to tell if we don't have the market profile built on the side. So when we pull this out to a 3-year chart, what we can see with the NASDAQ is the overall market, while on a yearly chart, the volume profile is way up here. But now we can see over the course of 3 years, where does the market actually find value? Value, right? Value is way down here. This is where the point of control is for 3 years. That includes the pandemic, right? So pre-pandemic, this is kind of the levels we were at, right? Pre-pandemic, we traded all below here, all right? So think about the psychology of the markets going into the pandemic. We were looking pretty good, right? Everything was looking pretty good. This pandemic happened. We basically shut down the economy and tanked it. Well, what's happening right now? We're starting to see possible kinks in the armor of this economy. That's why we're getting this little bit of a pullback. But where is value? Some folks might be looking at a 52-week chart 1 year and saying, oh my God, this has got to be value. But you draw it back here and see the point of control is another 20% lower. Well, then you start thinking back to the psychology going into this. That was a pretty strong economy, right? Are we going back to that level? The point of control would definitely be trying to pull it back down, especially if we get below this 11,250, which is what I've been talking about as a key level that has to be held here. I thought we were going to go down there and test it when we were trading up in this area. Even I thought we would break down and go down there and test that area. I think we still have that in the books. If we break this level, it's surely going to go back to the pandemic high there, or pre-pandemic high. What standard deviation would correspond to the 70%? That is a great question. The 70% is a half a standard deviation move. And it's basically, if you're looking at like the options, actually that's one standard deviation move because 15% out on standard deviations here. Let's just draw it out here. Standard deviation curves. Well, let's draw another one. right? We get this line, basically 34 is right around here, 15% here. We got 34 here, and about 15 here. Okay, so this is a half standard deviation. I forget how to do standard deviation right now. This is 15%. So, you know, you can think of downside, upside. This is 0 and 50% happens here, 50% happens here, right? So these also line up with delta. So on standard deviation curves and stuff like that, listen, the options are correlated to this. A 34 delta is a half standard deviation move. A 1 standard deviation move is all the way out there to the 15 delta or 15%, which means your question, the lines in the sand for the 70%, it's everything in here is 70% then, right? Because this is 15% going that way and 15% going that way. So your half standard deviations are outside of that, okay? Does that make sense, Martin? So that's what we're looking for. Once you start getting outside those extremes, you know, the market will slow. You're going to start seeing other people come in because why? They haven't seen that price traded, right? So you want to wait for the market to show you those some of those extremes. One of the things I wanted to show you with this one though is bring it out. Make sure you guys are looking at longer durations as well. All right. Now, that's for somebody that's outside of a day trader, right? If you're a day trader and you're trading intraday, then I still want you to bring that outside of that that realm. As a matter of fact, we got some time here. This is what I want to get through some of these charts because I didn't know how. Oops, I want to get to this, and let's pull up some real charts here. I didn't know how we were going to do this, and Zoom is perfect, so we will rock it this way. Also, let me see if I can get my pen to work. An extra, there we go. Put that away, throw this somewhere. All right, so we can draw. All right, one thing I want you guys to take back from this is how to build this out. So let me just clean this chart up. As a matter of fact, I thought I had a clean chart. Anyway, we'll just do this one. And I'll show you how to create this. Basically, I'm going to get rid of everything. All right, so we have a clean chart. Now, we're just going to go back to the beaker, if you will, and monkey bars. So monkey bars is Stoudemire's. And that is your time nodes. All right. Those are going to tell you every time bracket. Why isn't my time node showing up on there? Oh, I didn't put it in. There we go. So you can see IBM time right in the middle, nice big bell curve. One could say that it's a little skewed to the downside, so we got a little bit of skew there. But your 70% rule, that's where you would want to take advantage of this. Now, if you are a day trader, actually, let me go through this and get the other volume profile. All right. So the volume profile layers this on this way. And this is for a longer term trader. I'm a longer term trader. I always say I'm a recovering day trader. Actually, I'm a recovering oil day trader, crude oil day trader. But anyway, that was the thing that got me out of trading futures finally, after Fed funds were flat for years. But one thing we can do with this is break this down into like a daily chart. If you wanted to look at this, say, for instance, on a 10-day, 30-minute chart, right? A lot of folks are going to trade intraday. Volume profile, when it's way out here, doesn't really help you for a day trade. It's going to be picking different levels throughout a given day all right? So what you want to do is if you want to break this out so that you can see what the psychology of the market is at any given day, you want to go in and adjust a couple of these settings, which is really simple. First thing you want to adjust is automatic. You want to take that to tick size. The next one, the PERT, is going to be on the day, because I want to break it out so that I see what each day offers, okay? So I'm going to go to the day, and then do I want it on expansion? This is expansion when it's off to the side. The only one I want to take off expansion is the volume. So I'm going to hit OK on that, apply, and we'll see now what we get is the volume profile for each day. And what happens here is there's a lot of different rules for day traders that we can go into here. I'm just going to only touch the surface here because we could write books about it. There are books about it. I'm not going to write a book about it. There's too many out there already that you can read. But what the idea here is when you have a point of control that constantly starts ratcheting higher, that's very bullish. But as soon as you start seeing the drop, that's obviously very bearish. The market wants to revisit all those points of controls. So just like I talked about, the market is a bit of a magnet, then you can see this happen with the points of controls, that they want to revisit those, all right? And you can see the lower lows, lower highs as well. So if we start breaking down here, we're going to want to revisit these value areas, all right? Now, on the floor back in the day, what I would end up doing, and I haven't been able to figure out very well how to do this, but you can stack these up to be weeklies as well. So you could have your weekly chart. So last week, the point of control was higher than this week. We can see that consistently starting to ratchet down, all right? What I'm getting here is, a lot of folks are going to be talking about your mental game, getting into the game, getting in there. What I think of as the psychology of our trading is you have to know the levers and pulleys of the market in order to remain calm when they're trading. If you know your probabilities, like Martin was talking about on the bell curve, getting outside that 70 percentile, well, we know those are extremes. And once we get to extreme levels, there is going to be a place where buyers come in. They can't wait anymore to buy at these levels, all right? Or sell at those levels when we get to those extremes. So the idea here is take what the market is giving us in where they find value, and that's where we should be taking advantage of finding value, all right? You get to the extremes, well, nobody's finding value there. We know it's losing momentum. That's where we want to pick up the pace, right? We want to help the market there, all right? We don't want to trade around the point of control because that's just going to flutter there. We want to wait till we start seeing these extremes and then a reversal, all right? You start seeing that reversal to come back. That's when you want to get involved. It bounces off of this low and immediately comes away, golden. If it comes out of the zone, wait for it to come back in, because once it comes back in, it wants to go back to the point of control. It's the psychology. We are creating a self-fulfilling prophecy by trading with each other. We are all smart people. We remember our trades. Those other people that are trading with you, remember their trades too, folks. So all of this stuff that our limbic brain is seeing, this value, our limbic brain knows, if we're just trading, we don't trade that price and we forget about it because we didn't really trade it. Our limbic brain knows. It saw, 132.21 thousands of times. It can calculate that, all right? And it'll give you I can take advantage of it, all right? And, if you're getting involved trading around here and it flutters around, you're going to be kind of wondering what's going on. So at the end of the day, to keep your powder dry, to be a good trader, to keep your head in the game, you have to know what the market is telling you. You have to know what the levers and pulleys are doing in the market, all right? So we can go through and let's just check out a couple of different ones. Let me get a different chart up here because I don't want to go through and, well, let's just go to the, see what a day. So if you go to a day chart, it's going to break it down a little bit different. You're going to get your value area highs, value area lows, a little wanky. That's why I do it the other way with the settings that I have. You want it on expansion, you want it on day, tick size, and keep it on the 15-minute, 30-minute chart. The reason why I have this on 30-minute chart is because the volume and this time nodes are calculating off of a 30-minute chart there. It doesn't change really if you go to the 15, you can still do it. If you're a shorter term trader, you can see that it's just not calculating the last 5 days that the 10-day was calculating. But you still will see us want to get to the extremes and pull back, all right? The shorter and shorter duration ones, all right? And there's some other rules that will apply here. For instance, the previous day's range, if you open up outside of it, you're going to, for instance, here, we opened up inside of the previous day's range and started trading outside of it. That is very bearish. As soon as you can't get back to the point of control or the point of control totally rejected it, we didn't quite print that point of control, meaning it got rejected. That is bad. That means the market doesn't like it anymore. It's going to the downside. All right. If we had traded back up through this point of control the previous days, then it's basically an 80% probability you're going to completely engulf the previous days. But because this one failed there, then it falls. That's, you know, there's so many rules that we can talk about here. The previous day comes into the value area, it's going to want to retrace the entire value area. This one, we can see that the day opened up above it. As soon as we got back into the value area, what did it do? It retraced the previous day's full value area before it started rebounding. All right. So you can trade off of that as well. The psychology is I need to revisit those points of control. And if we don't, then the market is going to fling in the opposite direction. If it can't rebound to the point of control on either direction and it gets rejected, that means the bulls, in the case of the sell-off, are taking control. All right. So you want to jump on board with that. I finished a little bit earlier. If you guys have any questions or want me to talk about anything else, I would be happy to go over it. But for the most part, I've gotten through my slides and everything I wanted to talk about. I spoke a little fast probably for some folks, and Rick didn't like my market profile psychology of the market clearly. Hopefully the rest of you guys can take something away from this, because truly, folks, when you're trading around the market profile, you will see all of these things come to fruition. These different volume nodes are places where the market will migrate to. You start getting different ones. So for instance, if we saw this volume node move higher, that means price is being accepted at higher levels. So anytime we're looking at any of those charts and we want to go back to, I'm just going to pull up a different chart. Let's just do this one. I'll link it so we can flip through it and just flip through some charts here. So again, gets to the extreme. NVIDIA, I mean, NVIDIA is directly correlated to Bitcoin. So I don't know if I'd jump on this right off the bat, but the market has bounced away from this, come back into the value area. One would expect this to start trying to claw its way back to the point of control. Sarah's asking, how do you have the market profile and the candlesticks on the same chart? So what I do with mine is I have it on expansion. Now, if I don't do this on expansion here, on this one, if I go in here and say no on expansion, it's going to drop it into the middle. Is that what you're talking about? Does yours do that, Sarah? Or kind of, I don't like it to cover everything out. So if you go back to that place and have it where we say we want it on expansion, yes. Yeah, play around with it because sometimes the profile will overlay on top of it. And, you know, I don't know how yours works, but it should still give you where the price level is for the value area high or the value area low. Okay. But for me, I've been bearish Nvidia for a while now. Just flipping through this chart, I would think that that would look like an area that we could take advantage of. Again, always go back to this 3-year chart, or at least because you can bring in the pandemic, gives you a little bit different look, right? Twitter, right back to the point of control. So, you know, Twitter, would I buy Twitter here? If I wanted it for a long-term trade, I might nibble here just because that's where the market's found value. I would definitely like to wait for it to get to a little bit more of an extreme though, maybe down to around the 30 area, right? Because then we know we've had the thumb screws put to the market. But a little nibble here wouldn't be bad. The next one, next volume nodes. Those volume nodes are what you're looking for, where the market's been finding value. If we started rallying, it would probably go straight to this 48 area. 48, yeah, right around 48. Because that's the next volume node. That's where the next price is. If this volume node then shifted after getting back up there, that means price is being accepted higher, value is being accepted higher. Everybody will shift to that being a bullish trend, right? You see those volume nodes move higher, that's acceptance of value higher. That means the bears are seriously on their heels. Okay. Do you swing trade stocks or options? I swing trade with options, Martin. Like I said, I'm a recovering day trader, if you will, but I like to stay away from the stocks because you're beholden to the market at any given moment. With options, I believe that you can turn the probabilities in your favor. You don't always have to be directionally right. You're not held to the market direction in order to make money. All right. So that's why I like options more than trading stock. By stock, your probabilities are 50-50. You're going to make money right off the bat, quote unquote. Right. Options, we can use the statistical averages, the bell curve, and figure out our probabilities right away. So I do swing trade stocks with options. How's that? If I see a move, and then that's what I try to do. So big distributions, a little bit easier to see when you get the two different distributions. The way I look at it is the volume is wavering value. Where the point of control is, where the volume is, that's where people have put their money where their mouth is and started trading. Did you send the trade? Did you use to trade futures? I did trade futures as well. I started out trading stocks in college, and then my discount broker came to me and was like, you know, I was trading IBM and Walmart. Walmart was always trading around 50, IBM right around 100. IBM 30 years ago was trading around 100, folks. It's trading 140. Remember my 145 high there? So it's still there. That's why IBM for newer traders, sideways market, I think is fantastic because you don't get those real rips. And, you know, you could actually even learn to start shorting and with a little confidence, I think. But big volume nodes, you start seeing those volume nodes at a higher level, know that we are accepting value higher, price is going to move higher. Psychology of the market is there's value higher, right? Starts moving lower, it's bearish, very bearish. You want to start thinking price is moving lower, get out, right? And you can see those happen before most folks, all right? They're going to wait to see their limbic brain start to say, hey, we're starting to see value down here. It's actually worth it down here, all right? It's worth something. You guys have any more questions? I can stay here all night. I'll answer questions about anything. Try and throw me for a loop. All right. David, are you there? I think I'm about done here. I'll show you guys the only thing I got left really is talk about my offer. But other than that, folks want to take advantage of it. Is our access to 15 hours of content. I go through every option strategy and talk about how we trade those, like the type of volatility you need to trade, how you buy, how you sell. When would you buy? When would you sell? All of those things I answer pretty simply by going in and talking about what the options are doing, the psychology of the options, if you will. All right, so please take advantage of that. I also do daily videos where I talk about the markets as well. You can participate in those and go into a little bit more detail about the market profile if you want to learn about that. Talk about some of those levels of retracing to those previous points of control. I'll give it a little bit more detail to that. All right. Thanks, David. I appreciate you having me on. It's been too long.
Yeah, great to have you back to close out the day.
Appreciate it.